How do you evaluate where we are now? Are you looking at this as we're still in some sort of compression type phase? Maybe seed was more insulated from compression versus like other parts of the market. Just talk to me about like the market conditions in early stage investing.
Yeah, I think that, I mean, the bull market that happened in 2020 is certainly an anomaly, right? And I think that it led to and maybe it was kind of the tail end of a long bull market where interest rates weren't zero, but they were low. And so the behavior was starting to get ingrained in people. The valuations were already creeping up. And then everything that happened in 2020 just like completely blew it up. And so in my mind, that correction always had to happen. The one thing that I feel fortunate about is I never really got caught up in the hype of everything is going to be a $15 billion company. And so entry valuations don't matter. And so I tried to continue to be a little bit diligent about how I'm approaching investments from first principles and like, do the valuations matter? How big are these opportunities? What does it mean? Like to be a $10 billion company, you probably have to be at about $1 billion in revenue. What does that mean, right? Like, what does that look like? And I think that today we're starting to come back to that first principle thinking where people are saying, okay, you want to build $1 billion business. That means you need to do $100 million in revenue. How much of the market do you have to capture to do $100 million in revenue? And what does that mean for your entry valuation today? And so I think that correction had to happen. I think that it happened fastest at the latest stages at the public markets, right? Investors immediately retreated the moment interest rates started rising and they could park their money somewhere else. And it slowly trickles down backwards. And so you saw, I think that the late stage markets, private markets are frozen. The Series B and C markets, which are kind of mid stage, are pretty frozen. And the Series A markets are happening, but in fits and starts. At seed, I think that, it took a longer time to correct. People took a longer time to absorb it. And part of me feels like the real correction may have still not happened because I think that there's a lot of these large unicorn companies that are unfortunately going to end up either getting washed out or recapped. And a lot of early stage investors haven't, they might have these funds that have been marked up to 5x and 6x, and they just haven't actually marked them down to see what that performance looks like, and that then realize like what does that mean for their investments going forward. But you do see, like I think in 2022 at the top of it, you would see seed investments happening at like $50 to $100 million valuations. So it's just wild with zero revenue. And in some cases, just a deck. I think that pretty quickly reset back to 20, and then you see it resetting back to 15. And I'm now once again seeing things happening kind of in the 8 to 12 range, which is, I think, as a valuation, post-money valuation range is a much healthier valuation range for companies. And so I think that where we are now from a valuation perspective is much better. From a general seed investment perspective, I personally am as bullish on the market now, on the seed market now, as I was in 2022 and 2021. I think that technology is one of those secular trends. It just doesn't care about what the interest rate environment looks like. In the depths of this quasi recession, we have some of the biggest boom in AI happening that we've ever seen. And every 14 days, it feels like we're doubling our ability to generate things with AI. And we're continually impressed by what that means for companies and startups. And so in my mind, like the pace of innovation is just accelerating. And if you were excited about investing in tech in 2021, you should be doubly as excited about investing in tech today.